BYD jumping this morning after notching record quarterly profit and sales, topping $100 billion in 2024. The world's largest EV maker topping Tesla's annual sales of 4.2 million vehicles. Here with more, we got Sean Tucker, Kelley Blue Book lead editor. Sean, great to speak with you. Talk to me about how you are seeing this dynamic playing out. When you take a look at those revenue numbers, you've got BYD around $107 billion and Tesla around $98 billion, so pretty big leapfrog there. Are you seeing that in terms of customer activity?
Globally, yes, absolutely. BYD has a price advantage in most of the globe. They have a cost advantage in that they're cheaper to build, and they've increasingly got a technology advantage. Last week, they showed off a charger that they claim will refill most of a battery in about 5 minutes. It's the kind of thing that's more a perception issue than anything else, because in reality, it would take years to deploy those to everywhere that they need to have them. But it convinces consumers that, hey, this is the best technology out there.
And so with that in mind, as you're thinking about what BYD needs to do to really capitalize more longer term on the mind share, because that is a larger shift that we've seen from purchasers too, mind share that some of the other automakers and EV makers have been able to acquire in addition to the market share from Tesla here. How does that kind of play out more long term from your own analysis and what we've typically seen in the past when you do see a newer company capitalize on a moment where there is that consumer sentiment shift?
They face a unique challenge in that both the United States and Europe are trying to slow them down in a sense. And so you're seeing the growth mostly outside of those markets. But the mind share, they are doing an outstanding job of growing as quickly as they can in growing markets outside of the West.
And talk to me more broadly about what you're seeing in terms of Tesla activity in particular. I know that you specialize specifically in kind of researching and looking into consumer-driven activity and advice over at Kelley Blue Book. Have you seen a real sea change that is what some investors have told me unrecoverable when it comes to consumer demand for Teslas?
Yes, I don't know if I would say unrecoverable, but what we've seen just recently is that the loyalty rates and the defection rates, which historically Tesla's been far better than the industry average, they've fallen to about the industry average right now. And that's kind of a lagging indicator in that I don't know that we're getting a reflection of the last week in that. So Tesla's essentially becoming an ordinary car company. And when you treat it as an ordinary car company, you look at it and you realize it's got an aging lineup. There's nothing really exciting coming down the pike anytime soon. They gave up a major competitive advantage last year in sharing their charging tech, and they made a big bet on automation. Musk says that's the future, but everyone else has also made a big bet on automation.
Right. So, Sean, what does Tesla have to do next to turn that around and not be an average car company anymore?
So, Musk tells us it's not a car company. And if that's the case, I don't know what to tell you because I'm an analyst of car companies. But as a car company, what Tesla primarily needs right now are two things. They need new, interesting products. What they have is dated. They are bringing out, refreshes and updates, but not new products. And some of the technology is a little behind the curve now in that most Teslas are built on a 400-volt architecture and most of their rivals are on an 800-volt architecture. And then, frankly, they've got a public relations problem in that I don't know what you do about Musk. We look at the numbers and we find that Tesla sales peaked all the way back in February of 2023. Just no one quite knew that at the time. So it's quite possible that with a politically quiet CEO, they would still be facing a lot of this, but they don't have that.
Sean, all of these things considered, in 2024, the Tesla Model Y was the #4 best-selling vehicle, according to Kelley Blue Book data. So as we're here in 2025, what are some of the early figures showing us about these roadblocks that Tesla's running into?
Unfortunately, our first quarter results will be coming out on Wednesday, so some of that I can't share yet. But I do think that you're going to see a drop in the Model Y. And as I said, the big issue they're facing right now is that both the consumer loyalty is going down, the consideration, the cross-shopping rate we're seeing go down, and the defection rate and people trading in a Tesla on something else is going up. So all the trends are bad.
And talk to me more broadly about what you are anticipating when it comes to autos. Obviously, a sector that is keenly positioned to be negatively impacted by tariffs. We have news today that tariffs will not be implemented as severely on a sectoral basis as once thought. To what extent do you think that the rally we're seeing in some of these individual automaker stocks like General Motors, like Stellantis here, will hold, given this potentially short-term news about tariff relief?
It's hard to know because that news is so short term. The tariff story changes regularly, and we're not just looking at that set that was changed today. There are also a round of car-specific tariffs that could come in on April 2nd. There's the threat of reciprocal tariffs. There's the effect of the steel tariffs, and it's changing day by day. Fourth quarter sales were quite strong, and that was fed really by two things. We had falling interest rates, and we had high inventories that dealers were looking to get rid of. Now, both of those things have changed in that the interest rate is no longer falling. And dealers are, I don't know that you're ever going to find a dealer who says, I don't want to sell all the cars on my lot today, but they are starting to look at their high inventories as a way to ride out the trade negotiations.
Sean, I'm going to be sitting on the end of my ergonomic chair waiting for that data to drop next week. Really appreciate the time.
Thank you so much.